Earlier this week, we covered McEwen Mining's fourth quarter results, labeling the company as the highest cost public gold producer on the market. Turns out we were wrong. We just hadn't reviewed Galiano Gold's financials yet, despite the two names releasing results on the same day. Yet Galiano still made money. So, how'd they do it? Let's dive in. Galiano Gold in the fourth quarter reported revenue of $64.6 million, which compares to, well, nothing for the fourth quarter of 2023. But it's not because the mine wasn't in operation. Instead, it's because a year ago, Galiano didn't own a majority stake in their primary asset, the Galiano Gold mine, but rather they only had a 45% interest, meaning they couldn't consolidate the results. In the year-ago period, Gold Fields was an equal partner in the operation, also holding a 45% stake, with the remaining 10% owned by the government of West Africa. That changed in March of 2024, when Galiano issued 28.5 million shares, paid $65 million in cash, issued a 1% capped NSR, and agreed to contingent consideration of $85 million in exchange for Gold Fields' 45% interest. At the mine level, revenue on a 100% basis improved from $59.5 million to $64.6 on a year-over-year basis, while income from mine operations improved from $8.7 million to $21.1. Returning to the corporate level, net income improved to $900,000 or 0 cents per share, as compared to a loss of $5.8 million or 3 cents per share in the fourth quarter of 2023. On an adjusted basis, net income improved to $5.1 million or 2 cents per share versus a loss of $5.4 million or 2 cents per share in Q4 of 2023. Adjusted EBITDA, meanwhile, improved to $21.2 million versus just $98,000 in the year prior. Cash generated from operating activities improved from negative $1.6 million to positive $13.8, thanks in part to an offtake agreement that was canceled in the fourth quarter of 2024. For the full fiscal year, revenue at the corporate level came in at $231 million, versus nothing again in the year-ago period. At the mine level, revenue on a 100% basis improved from $257 million to $265 million. Income from mine operations, meanwhile, moved from $82 million to $94 million. For the full fiscal year, net income at the corporate level actually declined, falling from $26 million or 12 cents per share to $6.1 million or 2 cents per share in 2024. On an adjusted basis, net income improved from $26.5 million or 12 cents per share to $42.2 million or 17 cents per share. Adjusted EBITDA, meanwhile, nearly tripled, going from $26.8 million to $71.3 million, while cash generated from operating activities went from negative $3.6 million to positive $55.7 million. Galiano ended the year with cash and cash equivalents of $105.8 million, which nearly doubled from the $55.3 million in cash held at the end of 2023. All right, folks, let's get into the production data. The fourth quarter saw Galiano's Galiano Gold mine produce 28,500 ounces of gold, as compared to 32,000 ounces in the year-ago period. The decline in production follows a few tons being milled in Q4 2024 versus the prior year, which fell from 1.5 million tons to 1.2 million tons. However, head grades improved from 0.8 grams per ton to 0.9, while recovery rates improved by 1% to 85%. That production level led to the sale of 24,673 ounces of gold being sold in the fourth quarter, at an average sales price of $26.09 per ounce, as compared to 30,555 ounces of gold being sold in Q4 of 2023 at an average realized price of $19.42 an ounce. Production comparatively came in at a cash cost of $14.26, a 5% increase over the $13.52 figure posted last year. All-in sustaining costs, meanwhile, totaled $26.38 an ounce, as compared to $20.65 an ounce in the year-ago period. And if you're paying attention, it also implies a loss of $29 per ounce of gold sold, which was a result of capitalized waste stripping costs at the Abore deposit, which, when excluded, brings AISC down to about $17.73 an ounce. For the full fiscal year, the mine produced 115,000 ounces of gold, which came up short of the revised guidance, which had called for 120,000 to 130,000 ounces of gold to be produced. The shortfall was blamed on lower throughput due to lower mobile crusher availability and harder ore being processed. Production, meanwhile, was down from 134,000 ounces in 2023. In terms of costing, cash costs climbed from $11.48 an ounce in 2023 to $12.73 an ounce in 2024. All-in sustaining costs, meanwhile, hit $20.63, which was within range of the revised guidance, which called for an AISC between $19.75 and $20.75 an ounce. The company, however, had initially called for AISC to be in a range of $1,600 to $1,750 an ounce. Excluding that capitalized waste stripping at Abore, AISC is reported as being just $1,533 an ounce. So, how are things shaping up so far in 2025? Well, the first quarter has already seen 14 days of downtime after a planned maintenance shutdown discovered the key components of the SAG ball mill needed repair, leading to a 2-week period of no gold production. This, of course, has led to the first quarter seeing lower production than management initially expected. But Galiano doesn't think it will impact the 2025 production guidance, which was released in late January. That guidance called for production of between 130 to 150,000 ounces of gold to be produced this year by Isanco on a 100% basis, which would represent an improvement of about 22% on a midpoint basis over 2024's production. Those ounces are expected to be produced at an all-in sustaining cost of $1,750 to $1,950 an ounce, with AISC expected to fall simply because there's more ounces to spread the cost around to. And to top it off, the 5-year outlook for Galiano is calling for gold production to improve by 75% from 2024 levels to a range of 230 to 260,000 ounces by 2029, with all-in sustaining costs of just $1,100 to $1,400, which is due to higher grade feed from the Abore and Isas deposits that is expected to boost production levels. Sustaining capital expenditures for 2025, meanwhile, are estimated to be $15 million, which includes $9 million for a tailings facility expansion. Development capital, meanwhile, is slated to be between $60 and $65 million, which is to be spent on waste stripping and site establishment at Nicron, and the completion of a secondary crushing circuit and village resettlement costs at Abore and Isas. Exploration expenditures, meanwhile, are pegged at $10 million, which includes 17,000 meters of drilling. All right, let's wrap it up. The fourth quarter had mixed results for Galiano. While gold production was down and costs were up, it's basically a result of an ongoing expansion effort at the mine. And they've capitalized some expenses that many peers seemingly choose not to capitalize. So good on them for owning it, I suppose. But on top of that, they're still making money here. So this isn't exactly a huge deal. Yes, they likely took the crown for the highest AISC in the fourth quarter, but on an adjusted basis, that AISC wasn't that bad realistically. And for the full fiscal year, even with those capitalized costs, their AISC might still have been slightly lower than McEwen's operations, although it'd be close. But again, in this gold environment, pretty well everyone is making money. All right, guys, thanks for watching. If you enjoyed this video or have other stories you want us to cover, please let us know in the comments section. Also, if you enjoyed this comment, please smash that like button. Guys, I appreciate all of you who are watching, all the kind comments we've been getting in our comment section. It really means a lot to us. I'm not just saying that. We read them all, and all those kind words we're getting, we do appreciate. Thanks for watching, everybody.